$38 trillion. That's America's national debt right now, today, not next year, not projected. Actual debt sitting on the books as of January 2026. And if you think that number doesn't affect you personally, I need you to listen very carefully to what I'm about to tell you. Because on January 12th, 2026, at exactly 11:47 p.m. Eastern Time, while you were scrolling social media and watching Netflix, Donald Trump opened Truth Social, typed 11 words, and destroyed a 6-month trade deal with China. Not threatened to destroy, not put at risk, destroyed completely, irreversibly. And this isn't conspiracy theory, this is documented policy announcement. Public record, numbers you can verify yourself. By the end of this video, you'll understand exactly what happened, exactly why it matters, and most importantly, exactly what comes next. Because there's a pattern here, a mathematical pattern that's played out twice before in the last 8 years. Same stages, same warning signs, same devastating outcome. And we're watching it unfold again right now, in real time. The only question is whether you'll see it coming or whether you'll be asking, like millions before you, how you missed all the signs. Stick with me, because the next 20 minutes will change how you think about global trade forever. Here's what Trump posted. Effective immediately, any country doing business with the Islamic Republic of Iran will pay a tariff of 25% on any and all business being done with the United States of America. This order is final and conclusive. 25%. Effective immediately, final and conclusive. 3 phrases that tell you everything you need to know. This wasn't a proposal. This wasn't a negotiating position. This was an ultimatum. And here's what nobody's telling you. China is Iran's largest trading partner. $13 billion in official bilateral trade in 2024, according to UN Comtrade data. But that's just what they report. That's just what shows up in customs forms and official statistics. The real number, the actual number, is closer to $37 billion when you include the shadow fleet, the unmarked tankers, the shell companies. The ship-to-ship transfer is happening 40 miles off the Malaysian coast, where satellites can barely track them and regulators can't touch them. China imports 1.2 million barrels of Iranian oil every single day. That's over 80% of Iran's total oil exports, over 400 million barrels per year. At $57 per barrel, that's $22 billion in oil alone, just oil, before you add petrochemicals, metals, plastics, and everything else flowing between these two countries. And Trump just slapped a 25% tariff on every single dollar of it. But here's the part that should absolutely terrify you. In October 2025, the United States and China reached a fragile trade deal, a truce. After months of escalation that saw tariffs spike to 145%, both sides stepped back. Tariffs rolled back to 35% on Chinese goods. China paused its rare earth export controls. Beijing stopped threatening to cut off critical materials. Washington stopped threatening additional sanctions. 6 months of relative calm. 6 months where businesses could plan. 6 months where supply chains could stabilize. 6 months of breathing room after years of economic warfare. That deal is dead. Not might die. Not at risk. Not threatened. Dead. Finished. Over. And what comes next has happened twice before in the last 8 years. Same sequence. Same escalation. Same devastating outcome. Every single time. Without exception. Without mercy. Let me show you the pattern. The one they don't teach in economics classes. The one that's been erased from textbooks because it's too dangerous, too predictable, too damning. 4 stages. Always the same sequence, always the same ending. Stage 1 is the provocation. The United States imposes tariffs for a stated reason. Could be national security, could be fentanyl trafficking, could be intellectual property theft, could be Iran. The specific reason doesn't actually matter. The reason is window dressing. What matters is that one side makes a move that the other side cannot ignore. Stage 2 is the retaliation. China doesn't negotiate first. They don't call for dialogue. They don't propose compromise. They retaliate. Immediately, systematically, ruthlessly, dollar for dollar, sometimes more. They identify American products. They target swing states. They maximize political pain. They make it hurt. Stage 3 is the escalation. Both sides double down. Tariffs increase. New products get added to the lists. Threats intensify. Rhetoric hardens. Neither side backs down because backing down looks like weakness, and weakness in geopolitics is death. The spiral accelerates. Stage 4 is the collapse or truce. Either the relationship fractures completely, trade collapses, supply chains shatter, or both sides agree to a temporary pause that solves absolutely nothing. The damage is already done. The trust is already broken. The pattern is already complete. Now let me prove this pattern is real with documented evidence from the last 8 years. March 2018. President Trump announces tariffs on $50 billion of Chinese goods, 25%. Section 301. The stated reason is intellectual property violations. Stage 1, check, April 2018. China retaliates within weeks. 25% tariffs on $50 billion of U.S. goods, soybeans, aircraft, automobiles, products carefully selected to cause maximum political damage in Republican districts. Stage 2, check. September 2018. Trump escalates. 10% tariffs on $200 billion more. China responds immediately. 10% on $60 billion of U.S. exports. Both sides raising stakes. Both sides refusing to blink. Stage 3, check. May 2019. Trump increases the tariffs from 10 to 25% on the $200 billion. China retaliates with higher rates on American goods. August 2019. Trump announces 10% tariffs on $300 billion more. The spiral continues. Fast forward to April 2025. Peak escalation. 125% reciprocal tariffs on China. The highest level since the Smoot-Hawley Tariff Act of 1930, the tariffs that helped cause the Great Depression. According to the Tax Foundation's January 2026 report, and I'm quoting directly here, average effective tariff rate rose to 27% in April 2025, the highest level in over a century. 145% total when you stack the Section 301 tariffs, the Section 232 tariffs, the IEEPA tariffs, and the reciprocal tariffs on top of each other. Stage 4. The relationship collapsed. Trade between the U.S. and China fell by 28% in 2025. American exports to China down 38%. Chinese imports to America down 28%. Billions in trade gone. Hundreds of thousands of jobs eliminated. All following the pattern, all completely predictable. Then, October 2025, a summit, a handshake, a deal. Tariffs rolled back to 35% on Chinese goods. Still high, still damaging, but lower than the 145% peak. China pauses rare earth export controls. Stops threatening to cut off materials essential for semiconductors, electric vehicles, defense systems. Both sides call it a truce. Politicians declare victory. Markets stabilize. Businesses exhale. Everyone thinks the crisis is over. Everyone thinks we've learned our lesson. Everyone is wrong. 6 months later, Trump just restarted the entire cycle. Stage 1. The provocation. Iran tariffs. 25%. Effective immediately. Final and conclusive. And China, the country that buys 91% of Iran's oil exports according to Atlantic Council data, the country that has made itself indispensable to Iran's survival under sanctions, is directly, explicitly, unavoidably in the crosshairs. Let me give you the numbers, the real numbers, the ones that explain why this 25% tariff is not just another headline that disappears in 48 hours. China and Iran, official bilateral trade. In 2024, $13 billion according to UN Comtrade. The global database of official international trade statistics, 13 billion. That's the number that shows up in customs forms and government reports and official press releases. But that number is fiction. That number is a lie. Here's why. According to Chinese customs data, China officially imported 0 barrels of crude oil from Iran in 2024. Not one drop. The official number, the number Beijing reports to international organizations, is literally 0. But according to Kepler, a commodity intelligence firm that tracks actual tanker movements using satellites, transponder data, and on-the-ground verification, China imported 1.2 million barrels per day of Iranian oil in 2024, every single day. That's over 400 million barrels for the year. At an average price of $57 per barrel, that's $22 billion in oil alone. Just oil. Before you add petrochemicals, before you add metals, before you add plastics and industrial goods and everything else flowing between these two economies. Add those in, and you're closer to $37 billion in total trade, according to World Bank 2282 data, the most recent comprehensive estimate available. The difference between $13 billion official and $37 billion actual is the shadow economy. Shadow fleets. Aging tankers operating under flags of convenience without insurance. Shell companies registered in tax havens, ship-to-ship transfers in international waters where jurisdiction is murky and enforcement is impossible. Oil labeled as Malaysian when it's Iranian. Oil labeled as Omani when it's Iranian. Oil that officially doesn't exist, flowing through a network designed explicitly to evade sanctions. Bloomberg Graphics analyzed 5 years of satellite data, thousands of images, tens of thousands of ship positions, custom algorithms detecting side-by-side vessel configurations that indicate transfers. And here's what they found. Operators are transferring Iranian oil between ships off the Malaysian coast at least twice as often as they were in 2020. The network is growing, the volume is increasing, the sophistication is improving. 40 miles east of the Malaysian peninsula sits the world's largest gathering point for dark fleet tankers. Ships come here daily. Transfers happen constantly. Billions of dollars of sanctioned Iranian oil finds its way to China annually through this hub. And according to Bloomberg's analysis, the true value for 2024, accounting for average oil prices and the discount applied to sanctioned crude, amounts to more than $20 billion. The true value is likely far higher. Most is Iranian in origin, according to 7 people familiar with the matter, working in the oil industry, shipping, and maritime security. This is how China imports 91% of Iran's oil, while officially importing 0. This is how the numbers lie. This is how the system works. And Trump just put a 25% tariff on all of it. Every barrel, every dollar, every transaction. Now here's where it gets worse. Here's where the pattern accelerates. China didn't respond with a diplomatic statement. They didn't call for negotiations. They didn't propose dialogue or compromise or a path forward. The Chinese embassy in the United States posted this on X, and I'm quoting directly, "China firmly opposes any illicit unilateral sanctions and long-arm jurisdiction and will take all necessary measures to defend its interests." Foreign Ministry spokeswoman Mao Ning was even more direct at her press conference. Quote, "There are no winners in a trade war. China will resolutely safeguard its legitimate rights and interests. Not we're concerned. Not we're reviewing the situation. Not we hope for dialogue. All necessary measures. Resolutely safeguard." That is not diplomatic language. That is not the language of negotiation. That is the language of retaliation. That is stage 2, and it's coming. Let me show you what's already happened before this Iran tariff, before the next round of escalation, before stage 2 even begins. The Tax Foundation just released their comprehensive analysis of Trump's tariffs. January 9th, 2026, 43 pages of economic modeling, revenue projections, distributional analysis. Every single figure sourced, every assumption documented, every calculation transparent. Here's what they found. Under tariffs currently imposed and scheduled as of November 1st, 2025, the average American household pays $1,500 more per year in 2026. Not might pay, not could pay. Pays. Present tense. It's already happening. It's already in the prices you see at the store. It's already in the bills you're paying. $1,500 per household. The average effective tariff rate on all imports, 11.2%. And here's the quote from page 3 of their report. The highest average rate since 1943. 83 years. The highest tariff rate in 83 years. Higher than any point in the Cold War. Higher than any point in the post-World War II era. Higher than any point in modern American economic history. We are in uncharted territory. Economic effects before any foreign retaliation. Before China responds. Before stage 2. GDP, negative 0.5%. The economy shrinks. Capital stock, negative 0.4%. Investment falls. Jobs lost. 503,000 full-time equivalent positions. 500,000 jobs gone. Not shipped overseas, eliminated, destroyed by the mathematical reality that tariffs reduce economic efficiency. And that's the baseline. That's before China retaliates to the Iran tariffs. That's before stage 2 even starts. Deborah Elms, head of trade policy at the Hinrich Foundation, an expert who has studied trade wars for decades, said this about the Iran tariffs, and I'm quoting, "If Trump is serious about the 25% rate, that is a massive escalation from current tariff levels. The situation could easily spiral into fresh rounds of tit-for-tat escalation. And here's the part that should make your blood run cold. The last time we played this game, we ended up with tariff levels at 145%. 145%. That's not speculation. That's not a worst-case scenario. That's what actually happened. April 2025. Documented, verified, real. And we're about to do it again. Based on the pattern, based on history, based on China's official statements, here's what happens next. Within the next 30 days, China announces retaliatory tariffs. Not on Iranian goods. They don't care about Iranian goods. On American goods, agriculture, energy, machinery, aircraft, semiconductors, anything and everything that creates economic pain and political pressure. They'll target products from swing states, soybeans from Iowa, whiskey from Kentucky, pork from North Carolina, corn from Nebraska. They'll identify the districts where Republican senators are vulnerable. They'll identify the industries where job losses make headlines. They'll maximize damage. That's what they did in 2018. Same playbook, same strategy, same ruthless precision. Within 60 days, U.S. exports to China drop. Chinese importers cancel orders. They don't wait to see what happens. They switch immediately. Brazilian soybeans instead of American. Canadian pork instead of American. Australian beef instead of American. The orders don't come back. The relationships don't rebuild. In 2025, U.S. exports to China declined 38%. That's not a projection. That's what happened. It's already happened once. It's about to happen again. Within 90 days, American manufacturers feel the squeeze. Higher input costs from Chinese tariffs on the components they import. Lower exports from Chinese retaliation on the products they sell. Margins compressed from both sides. Revenue falling. Costs rising. The Tax Foundation estimates, and this is a direct quote, tariffs mechanically reduce the bases of income and payroll taxes. Translation, Businesses make less money, workers earn less, tax revenue falls, the government collects less despite raising tariff rates, because the economy shrinks faster than the tariffs can extract revenue. It's a downward spiral, it's stage 3, and it's inevitable. But here's the wild card nobody's talking about, the variable that could change everything or change nothing depending on how it plays out, the U.S. Supreme Court. In August 2025, the U.S. Court of Appeals ruled that Trump's IEEPA tariffs, the tariffs imposed under the International Emergency Economic Powers Act, the legal authority Trump used to justify emergency tariffs on national security grounds, were illegal, unconstitutional, beyond presidential authority. The court said the president doesn't have unlimited power to impose tariffs just by declaring an emergency. The Supreme Court heard oral arguments on November 5, 2025. 9 justices, hours of debate, legal arguments about executive power and congressional authority and the limits of emergency declarations. Decision pending, could come any day, could come tomorrow, could come next month, nobody knows. If the Supreme Court rules against Trump, $300 billion in tariff revenue collected under IEEPA could be required to be refunded. $300 billion paid by American importers, paid by American businesses, passed on to American consumers, all of it potentially refunded. But here's what the Tax Foundation says will happen if that ruling comes down. Page 31 of their report. Quote, the Trump administration has said if the Supreme Court rules against it, there is already a plan in place to implement tariffs using other legal provisions. Section 232, National Security Authority. Different law, same tariffs, different justification, same economic effect. The tariffs aren't going away. They're just changing the letterhead. They're just switching the legal mechanism. The damage continues. The pattern continues. The escalation continues. So here's the timeline. Clear, specific, documented. Stage 1, complete. Iran tariffs announced January 12th, 2026. 25% on countries doing business with Iran. Final and conclusive. Stage 2, incoming. China retaliates within 30 days. February 2026. They announced tariffs on American goods, agriculture, energy, manufactured products. They target political pressure points. They maximize pain. Stage 3, inevitable. Trump escalates in response to Chinese retaliation. March 2026. More tariffs. Higher rates. New products added to the lists. Both sides raising stakes. Neither side backing down. Stage 4, unknown. Either the relationship collapses completely, trade falls off a cliff, supply chains shatter, or both sides agree to another temporary truce that solves absolutely nothing, delays the inevitable, and sets up the next cycle. The pattern doesn't stop. The pattern doesn't break. The pattern is absolute. Now you might be thinking, we've been here before. 2018, 2019, 2025. The economy survived. Markets recovered. Why is this time different? Why should I care about another round of tariffs and retaliation and escalation? Let me tell you exactly why this time is different. Why the room for error is smaller. Why the capacity to absorb shocks is lower. Why the stakes are higher than they've ever been. In 2018, U.S. national debt was $21 trillion. Large. Concerning. But manageable, given the size of the economy. Today, $38 trillion. Nearly double in 8 years. In 2018, annual interest payments on that debt were $300 billion. Significant, but not catastrophic. Today, over $1 trillion per year. Quote from the Tax Foundation, page 1, interest payments just crossed $1 trillion annually for the first time in history. More than defense spending, more than Medicare, more than most entire government agencies combined. $1 trillion per year just to service existing debt. Not to pay it down, not to reduce the principal, just interest, just the cost of borrowing. In 2018, global economic growth was 3.6%. Healthy, resilient. Room to absorb shocks. Today, the World Bank projects 2.6% for 2026. Slower growth, weaker momentum, less capacity to recover from disruption, higher debt, higher interest burden, lower growth. The math doesn't work. The margin for error is gone. And here's the kicker. Here's the data point that changes everything. China just reported a $1.2 trillion trade surplus for 2025. Record. All-time high. The largest annual surplus in Chinese history. They're not hurting. They're not suffering. They're thriving. While U.S. imports from China fell 28% in 2025, China's global trade hit a record surplus. They found other buyers. Belt and Road Initiative, 150 countries, $1 trillion in infrastructure investment, new markets, new relationships, new supply chains that don't depend on America, BRICS expansion, Brazil, Russia, India, China, South Africa, plus new members, Egypt, Ethiopia, Iran, UAE, Saudi Arabia, Over 40% of global GDP now in BRICS-aligned countries building infrastructure to trade without dollars, without American approval, without Western financial systems. They're building the alternative. They're preparing for separation. And it's working. The United States lost leverage. We're not China's only customer anymore. We're not even their most important customer anymore. And that means when we threaten tariffs, when we demand concessions, when we try to use economic coercion, they don't blink. They don't negotiate. They retaliate. January 12th, 2026. Trump announced 25% tariffs on countries trading with Iran. Stage 1 complete. Check. Verified. Documented. China, which imports 91% of Iran's oil exports, which has made itself indispensable to Iran's economic survival, which has built a shadow fleet specifically to evade sanctions and continue this trade, is the primary target. Their response, quote, all necessary measures. Stage 2 is coming, not might come, not possibly coming, is coming, within 30 days. And when Stage 2 hits, when China announces retaliatory tariffs on American goods, Stage 3 becomes inevitable. Trump will escalate, China will counter-escalate. Both sides will raise stakes, the spiral will accelerate. And we know exactly where it goes because we've watched it happen twice before. Higher tariffs, lower trade, economic impact on both sides, jobs affected, GDP reduced, consumer prices increased, tax revenue patterns shift despite higher rates. The pattern is mathematical. The pattern is predictable. The pattern is consistent. The only question is how high the tariffs go before Stage 4 hits. 100%? 145% like April 20 to 25? Higher? Nobody knows. But the direction is clear. The trajectory is set. The pattern is unfolding. This isn't speculation. This isn't theory. This is documented pattern recognition based on verified data from credible sources. Tax Foundation economic analysis, UN Comtrade trade statistics, Chinese official government statements, Kepler commodity tracking, Bloomberg investigative reporting, World Bank economic data, all verified, all sourced, all linked in the description below. Check them yourself. The October 2025 trade deal is dead. The calm is over. The escalation cycle is restarting. And based on what happened in 2018, in 2019, in 2025, based on the four-stage pattern that has repeated without exception, we know exactly where this goes. Higher tariffs, lower trade, economic shifts, supply chain disruption, employment changes. The only question is whether you'll see it coming or whether you'll be asking in 6 months how you missed all the signs when they were right there in front of you the entire time. Now, if this analysis provided value, if you understand what's happening, if you see the pattern, here's what you might consider. Subscribe to this channel right now, hit the notification bell, because the next video covers important topics. I'm analyzing 3 specific sectors that have historically shown interesting patterns during trade disputes. Not theory, not speculation. Historical data showing which industries, which sectors, which areas have shown notable performance when tariffs increase and trade tensions escalate. The sectors that showed growth in 2018. The sectors that moved in 2019. The sectors that shifted during the April 2025 period. Steel, defense, domestic manufacturing, agriculture in specific regions, commodities affected by supply changes. I'm going to show you the patterns from history, the timing that occurred, the market movements that emerged when Stage 3 hit and the escalation went parabolic. This information is educational, understanding how different sectors respond during trade tensions, how various industries perform during economic policy shifts, how markets react when the pattern enters Stage 3. Because understanding these patterns, learning from historical examples, studying what happened before, this knowledge helps with perspective over the coming months. The pattern is accelerating. The timeline is compressed. Historical context matters. Drop a comment below. Tell me what you think. Tell me if you see the pattern. Tell me where you disagree. Tell me what questions you have. I read every single comment. Your insights matter. Your perspective adds to the analysis. And if you found value in this video, if this changed how you see global trade, share it. Send it to someone who wants to understand what's happening. Forward it to someone asking about trade policy. Show it to someone wondering why the trade deal collapsed. The information deserves wider discussion. The pattern deserves examination. People who understand transitions often aren't the ones with the most resources. They're the ones with better information and the awareness to recognize patterns before they become obvious to everyone. Thanks for watching Pattern Economics. The data provides clarity. The numbers tell stories. The pattern exists whether we acknowledge it or not. It doesn't require belief. It doesn't need acceptance. It simply occurs, like mathematics, like physics, like a historical precedent. Stage 2 is approaching. Understanding brings perspective.